Hello everyone, welcome to our 2020 tax year planning tips for individuals and businesses. If you worked with us in the past, you know that we've created, in prior years, PDF files, so one for individuals and one for businesses. That was, 10 pages or so that kind of highlighted new things that happened during the year and things to kind of look out for. Now that we're focused a lot more on video content, that we thought maybe why don't we just create a simple, to the point video to kind of go through tax tips for individuals and businesses. Keep in mind that this recording is November 2020, and by the time tax season officially rolls around, some of these things that I'll cover may change. So just be on the lookout for that. And tax law is very lengthy. It's long. There's a lot of items out there, and we're certainly not going to cover all that today. I'm just going to keep it very high level and to the point. So if you have questions afterwards, don't hesitate to check us out online. I'll have the contact information after the presentation. So kind of first off, one thing that we're officially doing is more tax planning for business owners, whether you're a freelancer, LLC, S Corp owner, or C Corp. There's lots of different tax savings that you can take advantage every year. So if you're interested, in your client of ours right now, definitely send me an email. I know we sent out a note to all of our current clients. But if you're a new prospect out there, definitely reach out to us because we're creating formal business tax planning plans that, so far we did it for one client and saved them about $90,000. So a lot of neat things. So to kind of start out, and I give a lot of presentations frequently at different venues here in Chicago. And I always start out the presentation when I talk about tax is kind of lessons learned. So from the 2019 tax season, here are kind of the big issues that we've seen with individuals and businesses. So keep these in mind as you kind of get ready for this year. So the first one is quarterly estimated taxes. As I tell our clients, it's the right thing to do. It's the correct thing to do is pay your quarterly estimates to the IRS and state. But the key issue is not only not paying them, but not knowing what you paid. So we can verify what you paid to Illinois, for example, but we don't know what you pay to the IRS. So it's important that you keep track of how much you paid the IRS, when you made those payments, and kind of keep a log of that. And then make note of this, the Q4 payment is due January 15th, 2021. So just make sure you get those out. Now, you can send in checks in the mail. If you do that, make sure you do it by certified return receipt. You can also pay quarterly estimates both to the state and the IRS online. There's a small fee, but at least you'll get proof and that the payments were accepted. For Schedule C single members, even business owners, if you paid contractors, the form in the prior years was the 1099 MISC. That form is now changed to 1099E or NEC. A great software we like using is called Track 1099. It's pretty inexpensive. They do all the filing for you. You can certainly use what's in QuickBooks Online. QuickBooks is a little bit pricier. And just based on past experience, it's difficult to kind of get the forms as well through QuickBooks and some of these other accounting softwares. So the one we like is Track 1099, but also keep in mind the 1099, the form has changed for the year 2020. And even to back up further, the IRS is pretty strict on this. They want to make sure that companies that pay contractors are actually sending out 1099s. So make sure that you start collecting W-9s from contractors, law firms that you've paid, landlords, because those are going to be due January 31st, 2021, the 1099 filings. Another thing that we've seen is missing K-1s from investments. What you may want to do, oftentimes, especially, we have a lot of clients that have investments elsewhere and they get K1s from those investments after April 15th. What you may want to do is kind of, if you know who those investors are, is maybe reach out to them, because oftentimes they can send you a draft of what your K1 will look like. Then we can use that as we prepare your personal return and kind of estimate what your liability could be by April 15th. We'll still extend the return. I know some of our clients do get drafts, and then obviously those K1s will be finalized later on. I'd say the number one issue, and this has happened, I'd say probably the last, 5+ years, is individuals, if you get a W-2, you're not withholding enough from your paycheck. Now the IRS has a free tool if you go online and you can kind of type in, your scenario. And I know we did a W-4. That's the form that you need to update with your employer. But I definitely, if you do get a W-2, make sure you go back and make sure that you're withholding enough. Because what happens is, especially if you're married, file joint, you're not withholding enough, and you kind of owe when you file taxes. So this continues to be the number one issue. We kind of send out reminders, so make sure you check that. And then here are the due dates. S Corps LLC, March 15th, C Corps, April 15th. And as I say every year, just be organized, start planning early, take, half a day out of your schedule to kind of make sure you're all aligned and ready to go. So in terms of 2020, this has been an unusual year. There's been a lot of different, with the CARES Act, a lot of new, tax credits out there. I'm just going to highlight some of some of the significant ones. There are other ones out there that apply to businesses, payroll tax credits. So I'm not going to cover all of them here, but if you want to know what the other ones are, feel free to kind of reach out and we'll be able to share those with you. But charitable donations on the individual side, even if you don't itemize, and you donated cash to a charity, of at least, $300, or the max is $300, you can deduct that above your adjusted gross income. So that was a nice perk there. And obviously they're trying to help out charitable organizations. And then in terms of deducting cash donations, before the limit was 60% of your adjusted gross income, that's now increased to 100% of your adjusted gross income. So your limit on what you can deduct of those donations has increased, which is great. We talked about the new contractor form. Standard deduction also increased. And again, if you don't itemize, typically people that itemize own a home, they have mortgage interest, they pay real estate taxes, they donate to charitable organizations. Those people typically itemize because that's a higher deduction for them versus taking the standard deduction. But if you don't itemize, then your standard deduction has increased. Student loans, employers can now pay down up to $5,200 to an employee's college loans, and those pay downs are not included in the employee's wages. In addition, students or employees, or if you have a student loan out there, you can use $10,000 of your 529 plan to pay down the student loan. So that was kind of nice. Some other changes related to 2020, and this is a big one, is the NOL carryback, net operating loss. And this applies to businesses or individuals. Before you're kind of limited on what you can kind of carry back. Now you can kind of carry back up to 5 years if you had losses. So just say you had a loss in 2019, you can kind of carry back, and the first year starts out with the farthest year back, which is 2015. And here's kind of like a simple example. You're a corporation, you had profits, and you paid tax back in 2015. But then you had losses in 2020. You can take those losses and go back to 2015 And obviously you got to amend the return, but then you'll get a refund back, which is nice. So, and as you know, if you're a C Corp now, the tax rate is 21%. And back in the day, the tax rate for C Corps was 35%. So it's a pretty nice savings here because you're paying taxes at a higher rate, but you're using this loss to offset, tax that you paid back then. And the loss is under the 21% rule. So this is nice. This also applies to individuals too. So just say you owned a business or you had some investment losses. You can kind of look at what happened here and kind of carry that back. So this is a great tax planning opportunity right now. And then the early withdrawal penalty waiver. Typically if you withdrew money from your retirement account, there was a 10% penalty. That's been waived for 2020 if you use those distributions for COVID-related purposes. And if you pay back those distributions over a 3-year period, those won't be included in taxable income. So this was kind of nice. Retirement accounts. So kind of looking at the Schedule C freelancer or single member LLC, we get a lot of questions about retirement accounts. So, if you haven't created one, there's a lot of different retirement accounts you can set up. They're pretty easy to set up. There's the solo 401k. The catch on here is if you go down this route, you got to set it up by December 31st. But you can contribute after the year end, and those contributions kind of relate to the year in question. So you got to set it up by December 31st, 2020, but you can contribute to that plan the following year, like in 2021, but those contributions would relate to 2020. There's the SEP plan, which I'm a pretty huge fan of as well. Make sure, if you're working from home for your business, you take, the home office deduction. And we have I think it's a 2-page PDF on our website. If you go to our website, we have kind of the rules on the home office deduction. Health insurance premiums, if you're a business owner, you can deduct those. Tax prep fees, accountant fees, you can deduct those. But I think the key here, and we see this every year when we bring on new clients, a lot of freelancers, single member LLCs, is there's a lack of using an accounting software. And I see a lot of Excel documents, Google Sheets, and we recommend, QuickBooks Online is phenomenal. Wave Apps is a free one. Xero is another accounting software out there. The key is these softwares keep you organized, and you'll be able to create an income statement, balance sheet, and it may be, $10, $20 a month, but think about it that it's actually running your business, and it just keeps you organized. So, and you can, send out customer invoices. You can do a lot with these softwares. And, the amount that you're spending on them to run your business, you can also deduct too. Keep your receipts. There's Receipt Bank, there's Expensify, there's Abacus. There's a lot of apps out there, but the key is keeping your receipts. We've seen prospects come to us that have been under IRS audit, and the IRS doesn't really accept bank statements or credit card statements as proof of receipts. They actually want to see a physical receipt, so it's important to kind of keep those. We're a huge adopter of HubDoc, which is kind of an accounting software that plugs into QuickBooks, Xero, and these other platforms. HubDoc is another tool to kind of store your receipts as well. And make sure you're claiming all your income. So even if you did not receive a 1099 from a customer, you should, definitely include that income. And then remember the qualified business income deduction. This could be up to 20% of your net income of your business. So even if you're a freelancer, single member LLC, this is a big one that we see a lot of business owners kind of miss. And then going back to retirement accounts here, there's donor advised funds. So if you, have a lot of money, you want to donate to a charity, but you don't know which one to donate to, you can just say you want to make, a contribution of $100,000. You can donate that to a donor advised fund, $100,000 in 2020. You can deduct those, right? That $100,000 in 2020, but maybe in 2021 or 2025, you decide, okay, I'm going to use this $100,000 to donate to 5 different charities. So that's a donor advised fund. You can set those up. Make sure, if you have a traditional IRA, you can convert that to a Roth IRA. And then here are the due dates to make those contributions. Gifts. Remember, if, you're, family and you want to gift your children $15,000 a year, that amount to the child is, it's not included in their income, and you don't pay tax on it. They don't pay tax on it because the gift tax exemption is $11.58 million per person. But the limit that you can contribute to an individual per year is $15,000. Now, if you're married, you can contribute $30,000, right, to your child, because it'd be you and your spouse. So this is one that we're seeing more of, but just keep this in mind. Then there's HSA, and we're seeing that a lot of people aren't taking advantage of this. One way of looking at it is it's a 3-tiered advantage, right? You put money away, it grows tax-free. You take money out, tax-free to use for medical expenses. And then the contributions that you put into it are also deductible. So you got 1, 2, and 3. Here are the, contribution limits. And also, some of these HSA plans require a minimum cash amount that you got to keep in the account. But there's others out there that once you exceed that, limit, you can invest it in the market. Because if you think about it, as you continue to, age, these HSA accounts are going to be very advantageous to you. So this is one that we see a lot of people not take advantage of, and we recommend that you do. Small businesses out there, or just any business, this is kind of our tax planning tip 101 is, if your cash basis is to kind of defer your billings and collections, and if you're on an accrual basis, delay providing services until after the year end. Because the idea is on cash basis, remember, if you collect any amount from your customers, that's revenue to you. So if you can kind of delay your billing toward the end of the year and then collections toward, to 2021, that kind of obviously reduces your net income. Same with expenses. You want to, spend as much as you can, but don't spend on stupid things. If you're, using Salesforce, for example, and your subscription is running out, see if you can kind of prepay for next year. See if you can prepay for office rent. If there's any other software, if you're trying to make that higher, do some bonuses. Or if you want to buy a truck for your car or for your business, you can kind of do that, and that accelerates your expenses. Employee children for your business. The advantage there is your child would be exempt from paying Social Security, Medicare, and federal unemployment tax. So that's a key planning tip there. Make sure about the home office. Expenses, we see this a lot where people will buy computers, business owners will buy computers for like $1,000, and what they do is they capitalize it, so they put it on their balance sheet, but instead, consider just expensing it. The IRS changed this rule a couple years ago where if you buy anything that's, $2,500 or less, just expense it and get that deduction. We talked about the QBI deduction, that 20% deduction. Make sure you're taking advantage of that. Bonuses, cash basis, make sure they're paid before the end of the year. Accrual basis, you have until March 15th to make those. S-Corps, we created a separate video on health insurance for owners and how to treat that with your W-2 wages. Make sure you see that video before the end of the year, because there's some steps that you got to tell your payroll provider to do. And then this is kind of under the COVID related, this employee retention credit. Even if you got a PPP loan, your business could be eligible for it. But there's kind of a catch where, if your business was under, if it was suspended or showed significant gross receipts, you could qualify for it, and it's used against, employment taxes. And as I stated earlier, just be ready. We find that those clients that are ready, if they're business owners, we're either doing their monthly accounting, those tax returns get done a lot faster than those business owners that aren't ready. Same on the individual only. Those that, have everything organized, chartable receipts, they kind of follow our process. They're ready. Their personal returns are ready to go out the door. Here's just some last minute things. The W-4 form that I mentioned, this is that withholding, charitable deductions, make a list, use a Google Sheet, use an Excel. We have a template. If you need one, let us know. Contractor payments, those are due January 31st. Quarterly estimates, remember you got your Q4 that's due January 15th, and then Q1 of 2021 is also due April 15th. Nothing's changed there. Just make sure that these are getting sent out. Tax forms, the cryptocurrency, that's huge. This year, the IRS is, it's been on the tax return, but they're moving it to page 1. But just be on the lookout for your tax forms. Storm. If you're a client of ours on the individual side, we're using a new software this year. It's a little bit better organizer. And then, as I mentioned before, for K1 investors, if you have investments outside and you get your K1s late, ask to see if you can get a draft version or when you expect to receive them too. And if you're not ready, it's always better to file an extension than not file one. And if you owe money, you got to pay money at the time of extension, because there's 2 types of penalties. It's not paying on time and it's not filing on time. And then businesses out there, we see this a lot, especially since we help a lot of startups, is they register their business with a state, but they forget to update the annual filing. So then the state kind of puts them in non-good standing status. So make sure, if you're a business owner, and make sure that you're current there. So that's it. If you have any questions, feel free to check out our website. We have a lot of great content there. We're constantly kind of building that up. Give us a call and we can kind of schedule a meeting. Thank you.